Hi, my name is Lance McNeil. I'm an active investor in securities-based crowdfunding, and I've invested in probably more than 50 companies, small amounts, but it's something that I've had an interest in. I like working with startups and small businesses, and I'm interested in putting some of my side income into companies that I believe in or visions that I want to see put forth. I got but as I've invested in companies through crowdfunding, I've noticed there are certain practices that are becoming common in the securities-based crowdfunding landscape. A lot of those concern me, and I wanted to start to shed some light on them so that investors in the crowd are aware of them, because I don't think they are, and just to kind of maybe encourage a little more ethics within the issuing of these securities through crowdfunding. So I want to use this example here from a company raising funds on republic.co. The company's called BioLite. They've got looks like a proprietary technology with intellectual property that can use red light technology for different therapies. I'm not going to get into the viability of this product or the markets or anything like that. I want to jump into here with this as a case study to look at the structure of the companies behind the deal and give you something to look for as you look at different crowdfunding campaigns. So let's take a quick look with this one here. Here is their crowdfunding campaign. It's raised $33,000 from 98 people already. I don't think it launched too long ago, so it's already off to the races here. But let's take a look here, and I want to talk to you about a red flag that I've noticed and point out how to find it. So one of the highlights, the very first thing that they say in this pitch is that the companies made $1 million plus in revenue in 2021. That's last year. And so far in 2022, current year, they've earned $445,000. This is pretty good, right? You're thinking, hey, this company's got some traction. I'm interested in maybe investing here. Your minimum investment's $100, so it's not a lot. But before you put any money into this, you want to always look at the Form C here. Form C, very easily found on Republic's website. I appreciate that. And you could take a look and verify if what they're saying in the pitch is true. So you just open up the Form C here, which I've got, and this is what you see. So I'm gonna blow that up so you can take a look. And you're actually seeing just in a couple of pages into this document, you could see their snapshot of their financial report. And you could see that there's no revenue for 2020, no revenue for 2021. Well, that's odd. Doesn't the pitch say that 2021 should have over $1 million in revenue? So I'm like, hey, what's going on here? So I asked the founder in the discussion portal, why is there this disconnect? And he says, well, the company that you are investing in through this crowdfunding campaign is a corporation that has recently been set up. How recent? Well, you could take a look here. Within the last year, and this is a corporation separate from an LLC where those financials are on the books, right? So you have an LLC that was established originally behind this company. That company generated $1 million plus in revenue. However, this is a different, separate entity, different in its structure. Previous original company was an LLC. This is a corporation. And the founder said, the corporation was formed because it's easier to raise funds in a corporate structure. Sure, fine, that is true. But why not convert the LLC into this corporation so that investors are investing in the same company that you created? Why create a total new entity with no assets and no revenue, and then ask the crowd to believe there's a $9 million valuation around this new company that has no sales, has $25,000 in assets, not completely nothing. But why do that, right? And so if you actually, they've put in the appendix the financials for this LLC that was created. and those are on page 56 of this Form C. So here is the LLC that was originally formed, and now you can see this company actually has assets, right? 89,000 in the most recent fiscal year of assets. And here are those sales that they talked about, right? 19,000 in 2019, 367,000 in 2020, and there's that over $1 million in 2021. But again, this isn't the company that you're investing in. You're investing in a brand new corporation with none of this on the books. Okay, why? Why do that? Well, I asked the founder and he said that's what his lawyer recommended. Of course, the lawyer recommended that because it's actually in the founder's best interest. It's in the original investor's best interest. It's not necessarily in the best interest of the crowd, of someone looking at the business opportunity for investment. Because if I invest in the corporation, all those assets are on the LLC. So I haven't invested in the LLC. Okay, so if something happens, this company dissolves, liquidates, and as an investor, I want to claim a share of the proceeds. If a liquidation event happens, there's complicated structure behind the deal, and the complications that have been created by the lawyer make it very difficult for the crowd to access what they were investing in, what they thought they were investing in. Right? Because there is separation, there are two entities, you're investing in more, in my opinion, more of kind of a front company, one that is shielding a company where the real assets and the real value are kept on the books. That's my opinion. I think if you're going to ask the crowd to invest, you just go ahead and be transparent, be honest, be authentic, say you're coming along for the ride as an investor on this company that I've created, that I've invested in. You don't create a different company with no value and say you invest in that, while me, my partners, and my co-founders invest in or retain the value in this company that we originally created. I don't think it's ethical. I don't think it's transparent. I don't think it's very honest to say here in the fourth line down in your pitch that the company has made $1 million, because that's not the company you're getting a piece of, that you're trying to invest in. That, I think, is one of the major things to look out for. It's becoming common, and I hope that you learned something today from this, and that you'll be able to spot that as you look at these crowdfund investment opportunities. Thank you.